Hi everyone. Today let's talk about the closest comparisons for markets from history to the current time. Then we'll get into all the usual data and charts as we go into this next week of trading.
Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started.
So which markets are closest to the current market? Let's take a look. So looking at the key factors, high yield spreads, inverted yield curve, correlation between stocks and bonds, and of course inflation are currently dictating markets. And there's a bunch of different markets to compare, and this is how they did it. So you have inflation, how close are we there, GDP growth, as well as yield curve. So comparing all of those things and then determining the distance between them. And in terms of analogous markets here, you can see there are some critical points. All of these highlighted are the ones that we're trying to compare to. These are the distances based on that previous chart. So what do we got? We got a couple of different markets to watch. 1996, 1973, dot-com bubble, great financial crisis. And there were also a couple that weren't so bad. 1979, 1989, 1995, and 2019. So the closest comparison is a mild recession. I think that makes sense. I think a lot of economists are kind of pointing to that. And what does that mean for markets? That means minus 18% if that were to happen. Another one is the Great Financial Crisis, very close at a 1.28. That was minus 8% based on current price. Dot-com bubble, fairly close at 1.89, minus 32%. And then COVID. You could argue that it's close to COVID, but I think that was kind of a unique environment. And then the other one here is the Asian financial crisis in 1995. That ended up with a positive 22%. I don't think any of these are really close enough to compare to. So you got a bunch of really negative ones, except for that Asian financial crisis, which was pretty solidly positive. And the average return was a minus 1%. So markets definitely looking mixed. You can see about 50% of the incidents resulted in a significant downturn. And all of these resulted in a loss of 1% compared to the typical 9% gain. So historically, probably not a great time to be buying long term. And I've actually talked about this many times. I think bonds are a better place to be if you're buying for those long-term buy and hold markets right now.
Looking at fear and greed, you can see we stepped up to a 35 from a 32, and a week ago we were at a 23. So markets have definitely gained a little bit of strength. We're still much lower on this indicator than we were on this previous up move. That was up around the 50s, or even this down move here was down around the 38 area. So we're still well below that. Starting to get close though at a 35, and you can see momentum back into greed. Strength and breadth still hovering, but gaining a little bit of momentum to the upside here on the Friday session. And then looking at the put call ratio, continues to trend lower. We're getting into that more normalized range between 0.6 and 0.7, and then volatility continues to crater. It's at a zone of support right in that 1450 area, and then safe haven demand and junk bond demand still in extreme fear. The bond market is not really buying into this big move up. We're still seeing extreme fear across the board on both of these. Moving over to the AAII survey, you can see we're getting oscillation between that neutral and bear side. The bulls have remained very strong between 40 and 44, so that's interesting seeing them continue to hold in here. But the bears definitely oscillating. We were at 30, then 25, then 37, and then all the way back down to 28 this week. Neutral, hovering a little bit. Obviously, they got squeezed last week, but this week they're at a more normalized range at a 28.6, sitting down at compared to 31.5. It is a little bit concerning to see the bears at such a low level. 25, we talked about it being very low there, and that's when we started to see some pretty major pullbacks. But just 2 weeks later, we are getting squeezed once again. So we'll see how it plays out. Is this a short-term top? It does seem possible. Moving over to seasonality, remember this is a bearish period for regular markets. During election years, you can find some bullishness, and that does seem to be what we're finding right now. Early in the month obviously was disastrous, but since then we've recovered quite nicely. And so far we're kind of on this track, headed towards a very strong month if we can keep up this momentum. And then looking at the calendar, Monday expected to be quite bullish. Week after, August expiration's been up 22 of the last 33, so that's quite bullish as well. But they do mention it's been a little bit more mix since 2005. And then looking at Wednesday, we get the FOMC minutes, also bullish that day. Existing home sales, that was a little bit bearish this week. And then home starts, again, that's going to be interesting. Markets did not like those numbers this last week, so hopefully they're a little bit better on this Friday. Moving over to the economic calendar, you can see we have CPI for the Eurozone on Tuesday, really nothing here on Monday, and really pretty low data here for the Tuesday as well. And then looking at Wednesday, obviously FOMC minutes, that's going to be the important one. Thursday, initial jobless claims, that's been more interesting recently, a little bit of economic data in there, global US manufacturing PMI, composite PMI, services PMI, and then that home sales data, that's going to be interesting. And then Fed balance sheet, continuing to watch that. And then for the Friday, we do have Jackson Hole Symposium. That's obviously going to be influential, especially once we get Jerome Powell's comments. And then new home sales here at 10 o'clock on Friday. So pretty light on the data overall for the week. Moving over to Max Payne. Max Payne's at 545. Total options way less, obviously. 500,000. Put call ratio is still pretty high there at 2.47. Look at all these puts in the market when compared to the calls. Very high put walls. Price is 553. Top of the calls is just a few dollars higher. So maybe we see some grinding price action. That'll be interesting. A little bit of a dip into that 548, 549 area would make sense. But top of the puts right now does not give you a ton of upside. So mixed markets, maybe slightly bearish. Moving over to the charts, starting off with the S&Ps here. On the weekly chart, you can see we got a very strong week, 3.39%. We're getting very close to that trend line there. Let's go ahead and extend that out just a little bit, which would put you up around 55.99, and then for next week it's going to be 56.13. Momentum swinging back to bullish. RSI going to contact that SMA here soon on the RSI, so pushing up to that level, and then we'll see what happens. Is this going to be a rejection from there? Certainly something to watch for. Either way, as we push into this zone, you could argue probably 1, maybe 2 more days of upside there. And then looking at it on the daily chart, you can see exactly what I'm talking about. Pushing into that zone, 5,600 over the next day or two. Eclipse this down move from 1 August. Maybe even get all the way to the top of that 23 July candle. Fill that zone. Momentum still bullish, RSI still bullish, so touch that trend line. Then you would expect a lower high setup and a rejection. Still gives you a couple more days of upside potential, but I don't think it's going to last. I don't think we're going to see like a major breakout of this zone and push all the way up into the 6,000 area. That seems unlikely in my opinion. It's not impossible. Definitely have seen things like that before, but if I had to guess, I would say that's not likely to happen. And then looking at the SPY charts here, you can see levels 554.87. That's right where we're at right now. Touch that level on the last candle of the day. If we can break that level and push to the next one, 560.07 would be your next resistance. And then if we reject it off of here, 555.12 would be the next level there. And then if that were to break, then the 55 EMA sitting down there at 543.42 would be your next zone of support for a potential bounce. Moving over to the Tasty charts here, you can see that big up candle. We got that second ATR, which is your current resistance at 560.20. So again, that gives you about another 1.5%. You'll notice we did get some decent volume 2 weeks ago after testing the ATR support, also testing that 34 EMA. Right now we're on the uptrend. If we did get all the way up to that upper ATR band, that would eclipse this previous high. That would put us at 574.40. I don't think we're going to get there this week, or potentially at all. I'm not sure we're going to eclipse this previous high, but certainly possible. If you're looking for it, that's where you would be looking. And then looking at it here on the daily chart, remember we are still in bearish conditions on the daily chart. Your current resistance there is 558.82. So again, about 1% higher. We're going to hit some major resistance, and then we're going to see what happens after that. Obviously, the short terms are all bullish, but that medium term here on the daily chart, resistance right there, that would put you just above that 23 July candle, just like we talked about. So super important zone there. Also, the second ATR band is right there as well at 559.37. Moving over to the NASDAQ on the weekly chart, you can see very strong week here as well, 5.38%. Pushed right back to that next level, pushed right to that 9 EMA at 19,457. And we are right now at 19,508. It's above this level, so based on that breakout, you would expect to push to this next one up here, which would put your price target up around the 20,000 area, which would also give you a double top. That would be interesting. Momentum step to bullish, RSI, same thing as the SPY here. You got this pretty consistent downtrend, looking to see if you retest this area up here. Again, that would give you still some more upward momentum over the next week or so, or at a bare minimum over the next couple days. And then let's see what that looks like here. So you got the 55 EMA, broke that level on Thursday, held that level on the Friday. And you can see we're above that here, momentum bullish, RSI bullish, same thesis, looking for a test of that SMA up there. We're still looking for this gap fill back to 23 July, so that's also something to watch. And it does look like it's going to happen, so once that gets filled, that could be interesting. You'll also notice we're starting to touch these lows back here from 24 June and the lows here from 19 July. So that's a zone of resistance. We're definitely finding some resistance there. But for me, I still think we're going to get the gap fill, and then we'll see what happens after that. And don't forget, we still have a gap gap here from 16 to 17 July that has still not been filled. So maybe we go up and fill that, and then we see this resumption to the downside. Hard to say right now, but overall I would say this is still slightly bullish. And then looking at it here on the Qs in terms of levels, 477.69 is the next level, 481.94 to the upside after that. If we were to break down a little bit, 471.93 is your current support, and then if that breaks, 468.05, which is starting to go back to these levels here from the top of that 29 July candle. Moving over to the Tasty charts here on the NASDAQ, you can see basically the same thesis as the SPY, not quite as strong. We're finding resistance already at that first ATR band. That's at 475.43. Your next one, which is more close to where the SPY is right now, that would put you up around the 490.70 area, so that would be another $15 higher from here. Didn't see any volume on this last candle, but we did see it 2 weeks ago, so we're still riding that wave in my opinion. Momentum, not saying bullish quite yet. So again, I still think this is going to culminate with either a double top or a lower high. And then we could start to see this more medium-term downtrend. So we'll see how it plays. Right now, it is still bullish. There's a couple of levels to work with. And then again, looking at that daily chart, just like we saw on the SPY, you got that ATR resistance sitting just above that 23 July candle. That ATR resistance right now is 484.32, which is about $15 higher from here. So quite a bit more room on the NASDAQ. It hasn't performed as well. But you can see that big volume here as we got that most recent rally started, but the volume has definitely been tapering. Once we get into this zone, if we see a volume spike and we start to see a reversal, that means to me that this is probably culminated. And you can still see these ATR bands are trending down despite the rally that we've seen. So to me, that means this is going to reject eventually. Moving over to the Russell had a decent week, 2.97%, very close to this trend line here at 214.31. We did break 212.10, looking to see if we can touch that level, and then your next resistance here would be 215.42. Strong week. Momentum didn't go with it though. RSI, again, similar to the other indices, you can see we could potentially reject from there, so something to watch for. If we get a lower high setup here, that means we're probably going to be pushing all the way down to these lower levels around the 190-150 area. But if we can break this zone, then there's really nothing saying that we can't start to push up to that 219 or maybe all the way up even to that 229 level over the next couple of weeks. And then looking at that daily chart here, you can see momentum still bullish, RSI still bullish, finding resistance at that 21 EMA on the daily, which is 213.42. Interesting zone here. You also have VWAP up there at 215.15. So lots of things acting as resistance in this zone. Again, if we can push through, should be good. If we reject from here, that's going to be a lower high setup and we're probably headed for lower lows. And then moving over to the Tasty charts here, you can see that up week. We did eclipse these highs back here from March, so that's a good sign. We are holding those levels right now. Volume, really no change. We didn't see any volume. ATR resistance right now is that 214.29 area. So again, another potential resistance. If we cut through here, next ATR would be 223. Do like that area. Still would give you a lower high setup, which wouldn't be great, but that would still give you a pretty solid move from here of about $10 higher. And then looking at that daily chart, of course, we still have bearish conditions here with that ATR resistance at 220.39. So that would be a resistance that fits in line with that next ATR that we talked about in that 223 area. So I still think we can see a little bit more push. Momentum on the volume-weighted MACD has not gone with this move yet, but to me, that means that this could start to roll here and maybe actually get a little bit of a resumption back into this previous consolidation. And that would absolutely be interesting. Right now, the ATR bands are tightening and they're going sideways. So to me, we should get back to this upper range and then we'll start to see what happens from there. Are we going to get a trend or are we going to get more sideways consolidation? The same that we've basically been seeing since March of this year. And then moving over to the Dow, very powerful week, continues to outperform on a relative basis, 2.39%. And you can see it's almost back to its all-time highs again. We're right at this trend line here. If we push through that, your next resistance is going to be 414, which would be that all-time high. So the Dow didn't move down nearly as much as the other indices. And now we're almost back to the all-time highs again. Much better than the other major indices right now. And then you can see momentum swinging to bullish, RSI breaking above the SMA. The Dow continues to look good here when we compare the structures. And then looking at that daily chart here, you can see right there at the trend, looking to see if this breaks. Let's go ahead and extend out this trend line here. If this trend line breaks, then your next resistance over the next couple days would be that 415.70, 416 zone. Momentum still bullish, RSI still bullish. Everything continues to look good on the Dow. It's not gaining a whole lot, but it's certainly not losing nearly as much as the other major indices. And then moving over to the equal weighted S&Ps, we actually got an all-time high close this week, which is pretty crazy to say. The close was 170.78 above this previous high, and you can see we're well above these highs from January of 22. So all-time high closed above the level. First time we've done that. It's not an all-time high on these wicks yet, but that's probably where we're going. 173.08 is that zone, momentum bullish, RSI bullish. So if we get a little bit of a continuation, at least a wick to those highs would not be surprising. And this continues to look quite bullish. You can see the pendant tried to break out, tried to break down, and now we're getting a continuation up, if I had to say, which is most likely going to be that true direction. So equal weighted S&P is showing a lot of strength, which to me means the broader markets are starting to participate a little bit more, but we did see the Mag 7 kind of lag a little bit this week. And then looking at that daily chart, you can see the breakout on Thursday, held those gains on Friday, looking to push to those upper ATRs. This was a solid double top, so there's going to be some resistance in there for sure. Candle closes up around 170, but again, the wick highs up around that 173 area, so definitely going to be interesting. Momentum and RSI still bullish here on the daily chart. Moving over to the ratios here, looking at the SPY Russell and the NASDAQ SPY, you can see the SPY Russell through a big wick. It was bullish, momentum still bullish here. So the Russell is underperforming a little bit, but this is a zone where you would expect to find some resistance. We talked about it last week. 259 was the zone, 9 EMA touched those levels and then rejected a little bit. Momentum says we should get a continuation here, but I still think this zone is going to be a little bit stronger. So we'll see how it plays. And then looking at the NASDAQ SPY, NASDAQ continues to outperform here this week, looking to push back to that 355 level. Let's go ahead and extend that out. You can see broke through that level, pushing to that 21 EMA at 352, and then that 355 level right after that. Momentum and RSI continued to roll back to the bull side, but looking for some resistance in the SMA area. Moving over to SPY divided by the M2 money supply, you can see strong candle just like everything else. It's actually getting very close to these recent highs. The high there is 27.07, and we're already at 26.50, so very close to that level. We'll see how it plays. This is probably going to touch that most recent high before we see the rest of markets touch it, so another thing to consider if we see a double top forming here before we see the rest of markets forming and then we start to see that roll off. It's a little bit of a leading indicator that we could see some more down moves a little bit sooner. On the week though, momentum stepped to bullish, RSI stepping back towards that SMA. And then again, if we get a rejection from here, that's going to be very bearish, but we haven't seen it yet and we haven't touched it quite yet, so still short-term bullish. Moving over to the Mag 7, it did basically exactly what we thought it was going to. Went right to the level, 265.08, missed it by just a couple of pennies on the closing price. Momentum swinging to bullish, again, very similar to everything else, looking to get to that SMA, and then we'll see what happens. We've definitely seen rejections like that before, like we did in May. Formed a higher low and then pushed. Got a very high extension here. Could be another iteration of that. We'll see what happens. If this level breaks, your next resistance is this trend line here around 273, which would also bring you to the low of the week from that 8 July week. Let's go ahead and add that level there. So you got something to work with. That zone could be interesting. If it pushes through there, then we're probably headed back to these all-time highs, which is up at 290.65. And then looking at that daily chart, you can see we got an inside candle on the Friday, which is a little bit concerning. That is typically a bearish pattern. Couldn't get above that 265. We did close above it on Thursday, but then we gapped down and then dojied. 55 EMA sitting there at 262.58. If that inside candle confirms and we get a down candle on the Monday, and then we start to see this momentum roll, that could be the short-term top here already. So something to consider there. If the Mag 7 starts to roll off, that's definitely going to be bearish for markets. But to be fair, if we did see a pullback, a retest of that 21 EMA down around the 257.28 area in here, and that zone holds, that could be a very bullish indicator that we could see much larger swings to the upside. Moving over to Apple and Microsoft. Apple, another strong week, 4.54% after recouping almost all of the losses the previous week. RSI crossing back above the SMA. Momentum hasn't gone with it yet, but this looks very good. Apple has continued to be very strong relative to the rest of stocks. You can see we're already above that 29 July week, getting very close to that 22 July week. And your next resistance here would be that 230.28 level. Seems like we're going to get there. And then looking at Microsoft here, it was a good week, 3%, not as good as Apple, but we did break 413.36. Now that 21 EMA is sitting as resistance there at 425.72. If we touch that level and reject, that's going to be awful. Momentum right now, it was flat from last week to this week. Haven't seen this step to bullish yet. RSI, again, just like everything else, it is trending down. That would be a zone of resistance. We've already had a high, lower high, so that was not great either. So we knew that this was going to break down. But the question is, will this be another lower high here and a bigger breakdown after that? I still think this is a distribution here on Microsoft. You can see here, fake out, breakout. We're in the middle of the range, holding this, and then we're going to reject from there, I think. And if that happens, we're probably going to see much lower lows in my opinion.
Moving over to Tesla and NVIDIA, you can see Tesla up 8%, NVIDIA 18.9%, absolutely massive week there for NVIDIA. Tesla on the weekly breaking that 214 level, so your next one would be 232.57. Filled this gap back to the previous week. Momentum not quite stepping to bullish yet, but RSI breaking above the SMA, volume increasing, so that looks good. 200 sitting there as well at 233.64. But look at this move on NVIDIA, gapped right to the level at 106.64. Continued to rally back to 125.17. That is the level right now, and the high of week was 125, so we missed it by just a few pennies. Arguably it touched, and you can see the high from the 22 July week was 124.69, so did touch that previous high. Maybe this level just needs to be moved down slightly. Moving over to Meta and Amazon. Meta has been a very strong performer. You can see we are just off of those all-time highs. Again, 1.86% to the upside, with Amazon up 6%, but again, look at the difference in structure. Meta right off of its highs, right off of this trend line. Trend resistance sitting around 551.98, 552, right in that zone. You can see we're just a hair off of that all-time high, which is 542.81, and the high this week was 539.77. So just a few pennies. Momentum swinging back to bullish RSI. It's above the SMA, but it's been trending lower, so kind of mixed on that one. Still in this consolidation, but I would say that this is probably going to go higher. And then looking at Amazon, strong retracement, 21 EMA as the target there, sitting at 183.03, which would be a still decent rally. You have a level in between there at 181.41, so interesting. And then momentum stepping to bullish, RSI, same as everything else, looking to trend towards that SMA, which should give it a little bit more upside, and then we'll see what happens once we touch those levels. Moving over to staples and discretionaries, staples hitting that trend line here. This is a longer term trend line. You can see marks the bottom back in March of 23, another bottom here in June of 23 before we got that bigger breakdown, and we are once again up to that trend line. If it breaks here, we're going to all-time highs. On a closing basis, this is an all-time high, but on a wick high, that's all the way back here on April of 22, and that high was an 81.34, so we're a little bit less than $1 from that price, and it does seem like we're going to get there. Momentum and RSI continues to be bullish. And then looking at discretionaries, strong week on the week. Tesla and Amazon had good weeks, 5% higher, but we're at this trend here, and this still looks like distribution for me. Multiple highs and lows, tried to break out, broke down. Now we're in this consolidation. If it continues to chop sideways and breaks down, that's going to be terrible. But if it can break here and start to push to some higher highs, maybe up around the 200 area, then we'll be in good shape structurally. So critical point here over the next couple weeks for markets. Moving over to oil and gas and transports, very similar thesis to everything else. Big dip down, recovery week, secondary continuation. Looking for that 8 EMA, I think that's probably looking for that 9 EMA up around 142.33 for the price target, and then you got VWAP just behind it at 143.86. I think we're probably going to at least retest these lows here right in that zone. Then we'll see what happens after that. Momentum stepping to bullish, RSI still below the SMA. And then looking at transports, again, big down move, big recovery week, continuation right to the 21, critical zone there at 65.57, highly traded zone there as well. If we can get to 66.63 and then break, then we're probably headed back to these previous highs, or at least the low from that consolidation around 68.48. But if it rejects from this 21, then we're going to be in that true downtrend, and then we're probably headed back to these lower lows around 60.34. Moving over to oil and gold. Oil was down just a little bit, 1.69%, but still in this range. 73.07 is the level. You can see we wicked all the way up to the 21 and rejected from there, so that's not great. Probably means we're going to head a little bit lower here. And I'm currently using this as a little bit of a caveat for the rest of the economy. If oil's headed lower, there's probably less demand, which is giving us a little bit of a leading indicator for economic conditions. And then gold, absolutely massive week, 3.31%, closed on the high, rocketed through that level. We've been talking about this looking like it's going to resume, and sure enough, it did here this week. So new all-time highs, continues to look very powerful, and we'll probably get at least another week or two of movement to the upside after that clean breakout. Moving over to RIOT and Marathon, we talked about these on the Friday session. I think they are looking quite good here. So you got an inside candle after the big move down, strong Friday move of about 4% or 4 and 5% to the upside. If we get a continuation candle here, I think we're probably headed to the trend line on RIOT, which is up around that $8.75 to $9 range, and then we'll see what happens from there. And then similarly on Marathon, inside candle, your price target here, 55 EMA around 17, but then you could look for a push back up to that major resistance up around 1878. So that would be about $2 higher from here. Momentum's not great yet. RSI not great yet, but that's an inside candle. You have to respect it. At a definitely right at the low from this consolidation, that could give you an interesting move of around 10% back up to that major resistance. Moving over to 20 and 50-day breadth, you can see 20-day breadth getting very close to these highs around that 82.65 area. That's where you tend to see the top of markets, and we're already at a 74.5, so you get maybe 1 or 2 more days of up push. It's worth noting you can definitely consolidate here for an extended period of time, but that's usually where you start to see reversals. And then looking at the 50-day, you can see we've had this series of lower highs here, and again here before we saw breakdowns, and now we're definitely getting back into that zone. If it breaks through here, maybe we see some more up move, but if it rejects from here, we're probably going to see a couple of weeks of down move. So again, getting very close to major resistance here on the 50-day breadth, which is in line with the 20-day also hitting that major resistance. So getting very close to some potential pivot points in my opinion. Moving over to 200-day breadth, we did get a positive week, but this continues to look like it's fading. We're right at that 21 EMA. Momentum still bearish. RSI continues to trend lower, chopping above and below that SMA. So still in this consolidation, arguably. You can see 2 weeks ago, we did make a new low on that wick, and now we're looking like we're going to establish a lower high, but we haven't done it yet. It was a strong candle close, so right now you would expect to push back to that 76.04 area. We'll see how it plays. We've been here for a long time, all the way since middle of December before we've seen any major breakdowns on the 200, and historically that's a very long time. You can see even some of these other longer runs, April all the way up until February, then we got big moves down. Similarly here, November all the way up until September, and then we got bigger moves down. So been here a while. Seems like a bigger move down is coming, but probably not within the next week, maybe even 2. Moving over to the dollar here on the weekly chart, you can see we've had 4 weeks in a row of bearish, and if you knock out that 1 week from 15 July, it's really been more like 6 weeks in a row. Closed basically on the low, headed towards that 102 area. If that zone breaks, we're probably headed back to the lows from the middle of December, which is going to bring us all the way down to 100.617. Momentum bearish, RSI bearish. Seems like we're going to get pretty low into that oversold condition. Then we'll see what happens from there. You also got the 200 sitting there at 100.26. So definitely some areas to go. This continues to look quite bearish structurally for me until we at least touch that 200, and then we'll see what happens after that. Moving over to yields, 2-year and 10-year, basically flat here. So 2-year was flat, 0.12 to the downside. Momentum actually stepped towards bullish a little bit. That's after being oversold. I'm not putting a whole lot of weight on that. I think these are really being driven by economic factors and the potential for a rate cut in September. So I don't think these indicators are really driving price right now, but I guess it's worth mentioning 4.05 on the 2-year, 10-year sitting at 3.88. I still think the 10-year is going to hover in this zone right at these lows from the beginning of January, right where we are now, probably between this 3 3/4 up to that 3.97 area, right in this range. Whereas the 2-year, I think this is going to continue to trend down as we get closer and closer to that September rate cut. We've seen a bunch of Fed speak. They've continued to signal it, and I do think it's coming. Moving over to bonds, JNK and TLT. JNK having a massive week, 1.19%, clear breakout. Closed on the high, 96.50 is the next level, 97.69 is after that. And then potentially the 200 sitting all the way up there at 98.59. I think that's going to be critical. But there is some risk appetite out there in markets, momentum bullish, RSI bullish. This has been a very long consolidation, getting a clear breakout. I think there's more opportunity there. And then looking at TLT, similarly, you got a low, higher low setup. Currently we have a high, lower high here, but I don't think that is going to hold. I think eventually this will be a high, higher high. You can see we're above all those short-term EMAs, headed towards that longer-term one at the 144. So your medium-term price target would be all the way up at 106.57, which would be back into this consolidation time frame, back from September of 22, really until May of 23. I think we're going to get back there, and then we'll see what happens after that. Moving over to the VIX here, you can see we got that massive spike 2 weeks ago, very, very high level, and then we rejected quickly from that area, and then we got a confirmation down candle. So based on that, you would expect this is going to head back to the consolidation area around 12.5, but we're at a critical zone, 14.7. We've been talking about it for a while. I think that's an important level. Marks the bottoms back here in June of 21 and some kind of consolidation highs back here really throughout the 2019. So definitely an interesting area, definitely an important zone. If it holds this level and sees a spike, it's certainly possible. And then you can see we're below the SMA. We've seen it like this before where you get a slight dip and then a continuation higher to a new peak. We took out all the trends, took out all these previous levels. The question is really, does this establish a higher low and then we see another spike, or is this just going to break down to a consolidation and then we're going to see another 5 or 6 weeks of consolidation at those lows? Hard to say right now, but definitely something to watch at that critical point. Moving over to my accounts, I made just short of $3,000. We did get a little bit of an after hours adjustment, kind of annoying, but I go off of the net liquidity for the end of the Friday session, which was $129,440. So just short of $3,000 on the week, not terrible at all. Makes sense with how bullish markets were, then we'll see what happens after that. So solid move. And in terms of positions here, you can see my covered call still at 209 for the Monday session for the IWM. I can continue to roll that out as I need to. Max profit there for that $4 credit is 213, so I have a little bit more room. Did fall a little bit after hours. And then looking at the Qs, I did try to take a little bit more bullish position here because markets were rallying pretty aggressively into the end of the session. So I took a 471 and 472, so pretty decently out of the money for about $1.40 credit. I wasn't expecting to hold that to the end of the session, so looking for an up move, try to take some profits there. I've been trading in and out of some shorter term positions on options while maintaining the covered call position. That seems to be working okay for right now, considering that we're not really in a major trending market. Right now, we're trying to figure out if we're going to establish that lower high and establish a downtrend, or if we're in a sideways consolidation, in my opinion. So in the short term, trading the consolidation with the short-term rallies that we've been seeing, looking for an up move on Monday. Let me know down in the comments section what you think of the market comparisons. Are we going to see a negative return over the next 12 to 24 months? Or is that even worth looking at and you just continue to buy and hold? Or are you still trading to the bull side? Definitely let me know. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.